We've got more big financial earnings, a fresh report on wholesale inflation, and much more. So let's get right to the floor show and SlateStone Wealth Chief Market Strategist Kenny Polcari. Kenny, very little seems to shake this market. Even Kevin Warsh showing unwavering commitment to the 2% inflation target his predecessor Jay Powell held to. I would have thought that would shake the market, but we got the Dow up 82, S&P up 18, NASDAQ up 119.
Listen, I think that Kevin Warsh is doing a very good job. He's very methodical. He's well spoken. He's made it very clear that inflation is a concern of his. He also made it very clear that he thought monetary policy was a big part of why we had such outrageous inflation. And I happen to agree with that. I think there was way too much money floating around the system, and that just kind of created the disaster that we all lived through and felt like once again we were going to live through again. But it seems to now have come back. If you look at today's PPI, much better than expected. That's certainly a positive. But what I don't see the market is doing, I don't see the market racing ahead on the back of that number. I think just because there's still a little bit of concern over the Iran conflict, over the price of oil, where's it going to go? How long is this going to drag on again? And to what point is oil going to remain elevated?
Let's talk about some earnings that came out. I do not want to ignore what happened with Morgan Stanley. A very impressive report. And once again, just like Goldman Sachs, JP Morgan, Bank of America, Citi, everybody yesterday that reported that equity trading revenue came in at an incredible jump year over year. For Morgan Stanley, it was up 69%. And we just want people to understand, right, that you as a former floor show trader, right? I mean, you've been on the floor of the NYSE for so many years. Doesn't matter which direction the trade is in. Those banks will make money if there is volatility. And all you have to do is look at the SOX, the semiconductor index, and the ETF that tracks it. And you can see how incredibly volatile it's been over just a couple of days. So talk about that, because, I mean, 1 minute on July 8th, the SOX was up nearly 2%. Then it was up 3.5%. Then it was flat. Then it was down 4.75%. And the 14th, yesterday, it's up 2.5%.
Well, you know, you have to your point, first of all, for all the banks, you know, that trading revenue, absolutely, they love the volatility, right? You look at a name like Virtue Financial. That's another firm that's going to do very well based on the volatility, because it's all about the trading that, you know, the traders will do, the algos will do, all that stuff. So that works very well. If you look at why there's such volatility, you could point to a number of factors. First of all, it's the environment, it's the concern, it's the anxiety around the geopolitics, it's the anxiety around the Fed, it's the anxiety around, you know, things being unaffordable, it's the anxiety around midterms. But it's also a direct result of all the new products that exist. So you've got ETFs, then you've got leverage ETFs, then you got inverse ETFs. And so they're all crashing with each other as the news hits the tape, right? You get triple leverage, you get double leverage. So therefore, people are betting on outsized moves. And if it goes the wrong way on them, the move can be outsized the other way, which isn't very good. It only creates more volatility. So that being said, the big major firms that have big equity trading desks, this is a boom for them.
Exactly. So the banks look to do well no matter what. Kenny, great to see you. Thank you very much.